Hello and welcome to another update video about XRP. On the XRP chart, just for context, we start on the larger time frame. Here, just to highlight again, we are still moving in an overall sideways range. You can see that the price is clearly currently respecting still relevant Fibonacci support. Quick educational moment. Why is Fibonacci support so important? Because when you use Elliott wave, which is the foundation of our model, if you use Elliott wave, and you only apply wave counts visually. So you just look at the waves and you think, okay, this looks like a third wave here. Okay, and this looks like a fourth wave. And then you don't know, okay, how deep can the wave 4 go? Could it go that way? Okay, there's a rule, an Elliott wave rule, that tells us a wave 4 must not break into the wave 1 price region. Well, down there we are at 65 cents. That would be, from the current price, around about a 70% decline, 70 to 75%. Now, from a risk management point of view, do you really want to stick to this wave count and plan until the price is broken down 70 to 75%? Well, no, probably not. You need a signal earlier that something is going wrong, that something is going the other way, that things are breaking, that sentiment is shifting. And that's why we use the Fibonacci mathematics, because Fibonacci levels tell us when sentiment is likely shifting from a mathematical point of view and when one wave count is likely going to invalidate. They are not invalidation points. Fibonacci support levels are not invalidation points, but they tell us when an interpretation of the chart becomes kind of unlikely, unreliable, has to change. So that integrates a degree of objectivity. A lot of Elliott wave analysts use the labels just visually. And they say, okay, this looks like a wave 3, this looks like a wave 4, and so on, to fit their own assumptions. But you can't do that when you want to analyze a chart, make it available. There has to be that degree of objectivity. And for me, I can say that I'm looking for higher prices, because this is a bullish thesis. But I know that when the price breaks below $1.20, I have to change my view. I can't sit here and tell you, well, this does still look bullish, because below $1.20, as per our MCO guidelines, this is going to, this is likely going to break down. Okay, there have to be these decision levels, these pivots, where the price will have to make a decision. And it's just a decision, right? And sometimes people say when support breaks, oh, Elliott wave didn't work. No, it did work, because even a break below support is a signal. But it signals to us that we have to adopt a more bearish stance. It's a very, very important level, right? So just because a level breaks, that doesn't mean that the analysis doesn't work. No, it's a signal from the analysis that we get that tells us we have to adopt a different viewpoint. Okay, that's very, very helpful. That's all part of the analysis. So in a sense, the analysis will also work when it gives us a signal that we have to change our view. Very, very important. Just a quick educational moment here, because the structure hasn't changed, so we don't need to discuss it too much detail. But the idea is that this is still a so-called fourth wave correction, which could get another low, but further upside is currently preferred. This is seen as a larger range, so $1.20 remains key support, and from here further upside is possible. Next resistance is $4.20, $5, $5.65. Let's take a look at the shorter time frame, because this is interesting. From this swing low here, this is the 30-minute chart. From this swing low on the 11th of March, the market has now been following here the yellow scenario, which is the one I shared with you a few days ago. I highlighted we can focus on higher as long as these swing lows are holding. The last communication was yesterday that $2.21 is the next key level against which we can focus on higher. I shared with you here potential 1-2-1-2 setup. That is a bullish structure from an Elliott wave point of view. And I said to you that to get an indication that the blue scenario, which is short-term bearish, but still overall potentially bullish, that this is taking over the lead, I need to see a break below the first red line at $2.21. Well, that hasn't happened, so the bulls are still leading here, and we still print higher highs and higher lows. Next resistance was $2.40. Again, one of these decision levels. Because there hasn't been a strong rejection, it indicates we might want to go higher, especially as long as the $2.21 level is holding. And the next structural resistance will be at $2.64 at the moment, at least based on the micro level, microstructure. Probabilities suggest that the price will test this one next. So currently we focus on higher against that last swing low there. and $2.64 seems to be the next resistance level to watch. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.